Welcome to Lesson 5 of Week 13, focusing on procurement standards. This lesson covers federal rules for purchasing goods and services with grant funds. When you spend federal money, you must follow federal procurement requirements. These requirements are found in 2 CFR 200, sections 317 through 327. The goal of federal procurement standards is to ensure that purchases are necessary, that prices are fair, that competition is used when appropriate, and that conflicts of interest do not influence purchasing decisions. These requirements protect taxpayer funds and ensure fair treatment of potential vendors. An important note, the dollar thresholds mentioned in this lesson are current as of November 2025. The micro purchase threshold is currently $10,000. The simplified acquisition threshold is currently $250,000. These thresholds are subject to adjustment. Verify current thresholds at ecfr.gov before making procurement decisions. By the end of this lesson, you will understand procurement methods for different purchase amounts, documentation requirements, competition and sole source rules, and conflict of interest requirements. This knowledge enables compliant purchasing with grant funds. Understanding why procurement rules matter helps you appreciate their purpose. These rules serve important public policy goals. Public funds means that grant money is ultimately taxpayer money requiring careful stewardship. When you purchase goods or services with federal funds, you are spending public resources. The obligation to spend wisely comes with that responsibility. Procurement rules operationalize the stewardship obligation. Fair treatment means all vendors deserve equal opportunity to compete for your business. Federal procurement rules prevent favoritism that would give certain vendors unfair advantages. When competition is required, all eligible vendors should have the chance to participate. Fair treatment supports both equity and efficiency. Value protection through competition and documentation ensures you pay fair prices for what you buy. Competition drives prices down and quality up. Documentation creates accountability for purchasing decisions. Without these protections, there would be no assurance that grant funds are used efficiently. Audit focus on procurement reflects its importance and risk. Auditors regularly examine procurement documentation as part of grant audits. Inadequate documentation, missing competition, and undisclosed conflicts commonly generate findings. Proper procurement practices protect you from audit problems. Procurement thresholds determine which rules apply to different purchase amounts. Understanding these thresholds guides your procurement approach. The micro purchase threshold is currently $10,000 as of November 2025. Purchases below this threshold have minimal procedural requirements. You need only ensure that the price is reasonable and distribute purchases equitably among qualified suppliers when practical. No competitive quotes are required. Simplified acquisition applies between the micro purchase threshold and the simplified acquisition threshold, currently $250,000. This range requires price or rate quotations from an adequate number of qualified sources, typically at least 3 quotes. Documentation of the sources contacted and prices obtained is required. Formal procurement above the simplified acquisition threshold requires more rigorous competitive procedures. This may include sealed bids or competitive proposals with formal evaluation criteria. The specific requirements depend on the nature of the procurement. Threshold verification is essential because these thresholds can change. The amounts stated are current as of November 2025. Before making significant purchases, verify current thresholds at ecfr.gov. Using outdated thresholds could result in inadequate procurement procedures. Micro purchases have the simplest requirements, reflecting their lower dollar value and risk. Understanding micro purchase rules enables efficient small purchases. Definition establishes micro purchases as acquisitions of supplies or services where the aggregate amount does not exceed the micro purchase threshold, currently $10,000. This threshold applies to the total purchase, not individual items within a purchase. Requirements for micro purchases focus on reasonableness and equity. You must consider whether the price is reasonable without necessarily obtaining competitive quotes. When practical, you should distribute micro purchases equitably among qualified suppliers to prevent consistently favoring one vendor. No quotes are needed at the micro-purchase level. You are not required to obtain competitive quotations for purchases below the threshold. This streamlines small purchases while still requiring attention to reasonableness. However, nothing prevents you from seeking quotes if you choose to do so. Documentation for micro-purchases should include basic records showing what was purchased, from whom, at what price, and some basis for concluding the price was reasonable. This might be comparison to catalog prices, prior purchases, or general market knowledge. Elaborate documentation is not required, but basic records are. Small purchases between the micro-purchase and simplified acquisition thresholds require more procedure than micro-purchases but less than formal procurement. Quote requirements mean you must obtain price or rate quotations from an adequate number of qualified sources. Simply purchasing from your preferred vendor without considering alternatives is not sufficient. You need to survey the market before making your selection. Adequate number typically means at least 3 qualified sources should be contacted for quotes. If fewer than 3 sources exist for what you need, document that limitation. The goal is meaningful price comparison, not just going through the motions. Documentation for small purchases should record the quotes received and the basis for your selection. Keep copies of quotes obtained, note any sources that decline to quote, and document why you selected the vendor you chose. If you did not select the lowest price, explain why, such as delivery time, quality factors, or past performance. Formal procurement methods apply to larger purchases above the simplified acquisition threshold. These procedures are more rigorous and structured. Sealed bids involve a formal competitive bidding process where bids are submitted sealed, opened publicly at a designated time, and awarded to the lowest responsive and responsible bidder. This method works well when specifications can be precisely defined and price is the primary selection factor. Competitive proposals are appropriate when factors other than price are important to selection. Proposals are evaluated against stated criteria covering technical approach, qualifications, past performance, and price. This method allows for negotiation and selection based on best value rather than lowest price alone. Formal advertising provides public notice of procurement opportunities so that all interested vendors have a chance to compete. Publication requirements ensure broad awareness of the opportunity. Failing to provide adequate public notice can invalidate a procurement. Detailed evaluation documents the assessment of bids or proposals against stated criteria. Evaluation records should show how each submission was assessed and why the selected vendor was chosen. This documentation protects against challenges and demonstrates fair process. Sole source procurement bypasses competition to purchase from a single source. This is only appropriate in limited circumstances. Definition clarifies that sole source means procuring without competition from a single vendor. You have predetermined who will receive the award without giving others a chance to compete. This departure from competitive principles requires justification. Limited circumstances restrict when sole source is appropriate. Valid reasons include situations where the item or service is available from only one source, when there is a public emergency requiring immediate purchase, or when the federal awarding agency expressly authorizes non-competitive procurement. Convenience or preference are not valid justifications. Valid justifications must establish why competition was not feasible. The item must truly be unique. The emergency must genuinely require immediate action, or the funder must have actually authorized the sole source. Weak or pretextual justifications do not satisfy the requirement. Documentation required means written justification must exist before making a sole source purchase. The justification should explain why the purchase qualifies for sole source treatment under one of the recognized exceptions. After the fact justifications are problematic. Document before you purchase. Conflict of interest rules protect procurement integrity by preventing biased decision-making. Understanding these rules is essential for anyone involved in purchasing. Prohibition means you cannot participate in procurement decisions if you have a conflict of interest. Individuals with conflicts should recuse themselves from the selection process. Participation by conflicted individuals taints the entire procurement. Personal interest creates a conflict when you have a financial or other significant interest in a vendor being considered. If selecting a particular vendor would benefit you personally, you are conflicted. Personal interest includes not only direct financial stakes, but other advantages as well. Family and business ties can create conflicts even without direct personal benefit. If a family member owns a competing vendor, or if you have business relationships with a vendor, these ties create potential for bias. The appearance of conflict matters as well as actual conflict. Disclosure requirements obligate you to reveal potential conflicts before participating in procurement. Disclosure allows appropriate handling through recusal or other measures. Undisclosed conflicts that are later discovered create serious problems, even if no actual bias occurred. The distinction between contractor and subrecipient determines which rules apply. Understanding this distinction prevents misclassification. The distinction matters because different federal requirements apply to contractors versus subrecipients. Procurement rules apply to contractors. Subrecipient monitoring requirements apply to subrecipients. Misclassifying a relationship can result in applying the wrong requirements. Contractors provide goods or services for your own use in carrying out the grant. You purchase supplies from a contractor. You hire a contractor to perform services you need. The contractor's work supports your grant activities, but does not independently carry out grant purposes. Subrecipients carry out a portion of your grant's substantive program. They have responsibility for programmatic decision-making within their scope. Subrecipients use grant funds to achieve grant purposes, not to provide goods or services to you. Determination factors focus on the nature of the relationship, rather than what you call it or how documents are labeled. A subrecipient relationship does not become a contractor relationship simply by calling it a contract. Examine the substance. Is the entity carrying out grant purposes or providing goods and services to you? Documentation creates the record that supports your procurement decisions. Complete documentation protects against audit findings. Purchase justification explains why the purchase is necessary for grant purposes. The need for the item or service should connect to grant objectives. If auditors question why you bought something, your justification provides the answer. Procurement method documentation shows how vendor selection occurred, which procurement method was used, were quotes obtained, how many sources were contacted. This documentation demonstrates that you followed appropriate procedures. Price reasonableness documentation shows why the price paid is fair. For competitive procurements, this is demonstrated by the competition itself. For sole source purchases, you need independent evidence that the price is fair, such as comparison to published prices, prior purchases, or cost analysis. Selection rationale explains why you chose the vendor you selected. If you had multiple quotes, why did you pick this one? If factors other than price influenced selection, what were they and how were they weighed? The rationale should be consistent with stated evaluation criteria. Certain practices are prohibited in grant-funded procurement. Avoiding these practices prevents compliance problems. Bid splitting divides purchases to avoid procurement thresholds. If you need to buy $15,000 of supplies, splitting that into two purchases of $7,500 each to avoid small purchase requirements is prohibited. Evaluate purchases at their actual total value. Unnecessary restrictions and specifications exclude qualified vendors who could meet your needs. Specifications should describe what you actually need, not artificial requirements designed to favor a predetermined vendor. Overly restrictive specifications undermine competition. Geographic preferences that favor local vendors over equally qualified others are generally prohibited. While supporting local businesses may be desirable, federal procurement rules prohibit discriminating against vendors based on location. Evaluate all qualified vendors on their merits. Brand specifications requiring specific brands without justification restrict competition. If a particular brand is truly necessary for compatibility or other legitimate reasons, that justification should be documented. Otherwise, specifications should describe required characteristics that multiple brands could satisfy. Equipment purchases have additional requirements beyond standard procurement. Understanding equipment rules prevents compliance problems. Definition establishes equipment as items costing more than $5,000 with a useful life of more than 1 year. This definition triggers additional tracking and disposition requirements. Items below this threshold are typically treated as supplies. Prior approval may be required before purchasing equipment not specifically budgeted in your approved proposal. Check your notice of award for equipment purchase restrictions. Buying unauthorized equipment can result in disallowed costs even if properly procured. Property records mean equipment must be tracked and inventoried throughout its life. Required information includes description, serial number, acquisition date, cost, location, and condition. Regular physical inventory verifies that equipment is where it should be. Disposition rules govern what happens to equipment when the grant ends. Federal regulations specify when you can keep equipment and when you must obtain disposition instructions from the funder. Equipment purchased with federal funds may have federal interest that affects what you can do with it. Service contracts require attention to scope and performance in addition to price. Well-structured contracts protect grant resources. Scope definition provides a clear description of services to be provided. Ambiguous scope leads to disputes about what was included. Define the work clearly enough that both parties understand expectations and that performance can be evaluated. Deliverables specify the outputs the contractor must produce. Tangible deliverables make it easier to verify that contracted work was completed. Reports, products, events, or other concrete outputs demonstrate value received for payment. Performance standards define how quality will be measured. Standards might include timeliness, accuracy, responsiveness, or other measures appropriate to the service. Clear standards enable meaningful evaluation of contractor performance. Payment terms specify when and how the contractor will be paid. Terms might include progress payments tied to deliverables, hourly billing with caps, or other structures. Payment terms should align incentives with desired performance. Avoid paying in full before work is complete. Common mistakes in procurement frequently generate audit findings. Awareness of these mistakes helps you avoid them. Insufficient documentation means missing records of the procurement process. Even if you followed proper procedures, you cannot prove it without documentation. Keep records of quotes obtained, selection criteria used, and rationale for decisions. Documentation should be created at the time of procurement, not reconstructed later. Inadequate competition involves not obtaining enough quotes or bids when required. Contacting only one or two sources when three are required undermines competition. If fewer sources exist, document that limitation. Do not shortcut competition requirements for convenience. Weak sole source justifications offer pretextual reasons for avoiding competition. Claiming something is unique when alternatives exist, or manufacturing emergencies to justify sole source, violates both the letter and spirit of procurement rules. Sole source justifications must be genuine. Undisclosed conflicts occur when people fail to reveal their interests in vendors. Even if the conflicted individual did not influence the decision, undisclosed conflicts create appearance problems and may invalidate procurements. Disclose first, then participate only if appropriate. Let us summarize the key points from this lesson on procurement standards. Federal procurement rules ensure that grant-funded purchases are fair, competitive, and efficient. These rules protect taxpayer funds, provide equal opportunity to vendors, and create accountability for purchasing decisions. Following procurement rules is not optional, it is a fundamental compliance requirement. Threshold awareness guides your procurement approach. Micro purchases under $10,000 have minimal requirements. Small purchases up to $250,000 require quotes from multiple sources. Formal procurement above that threshold involves sealed bids or competitive proposals. Verify current thresholds at ecfr.gov as they may change. Documentation is essential for demonstrating compliant procurement. Records should show what was purchased, why it was needed, how vendors were selected, and why the price was reasonable. Documentation created at the time of procurement is far more credible than after-the-fact reconstructions. In our next lesson, we cover financial reporting requirements, specifically the SF-425 Federal Financial Report. You will learn how to report grant expenditures accurately and manage cash appropriately. Practice exercise. Review a recent purchase made with grant funds. Evaluate whether procurement procedures match the dollar amount. Is documentation sufficient to demonstrate compliance? Identify any gaps that should be addressed in future purchases.